As U.S. stocks come off their best weekend since June, Wall Street's looking ahead to data out of the retail sector to offer a better glimpse into the state of the consumer. For more on what to watch this week, let's bring in Coresight Research founder and CEO Deborah Weinswig. Deborah, it's good to see you. So as we look at the retail earnings, certainly that we've gotten over the past couple of quarters, and look ahead to this retail spending report, do you think we're going to see still some strength here in the face of still persistent inflation?
You know, we are seeing strength across retail. What we have been seeing, and we believe will continue into this upcoming report, is that at the bigger ticket level, we'll continue to see a bit of a step back as consumers are continuing to grapple with inflation.
Deborah, what is the outlook you think for services? How do you think consumers will spend on goods versus services this season?
It's a great question because in many cases, anyone who's tried to buy an airplane ticket or get a hotel room, right, we're seeing basically just because of demand and supply, significant increases on the top line there. We are, right, I mean, if you think about it, before, kind of 2020, there had been this big move into services, not things, as everything was becoming more experiential. We believe that, as we kind of continue to walk back into this, kind of new normal, that we'll continue to see the balance shift back towards services, but it's just going back to the normal that we were in back in 2019.
You look out into 2023, especially knowing that services inflation and some necessities-based inflation, that also remains stickier for a longer period of time. When can consumers expect that to begin to retreat?
It's interesting. We do a very sophisticated look at leading indicators and then utilize that to predict retail sales. We do believe it will continue to see, kind of the level stay through October. And we think things start to, I'd say, weaken a bit in November, and that's in through kind of the first half of 2023. We do think there'll be some abatement as it relates to supply chain and shipping costs and whatnot, as the entire supply chain, kind of also normalizes, utilizing technology, et cetera. But that has been such a huge cost that retailers have had to bear, so that we will start to see, kind of prices continue to decline on the goods side. On the services side, we think it'll take a little bit longer.
And Deborah, we've certainly seen some areas where there has been more heavy promotioning than others, right? Because of inventory buildup, apparel, for example, home goods and furnishings, another. Are there areas within retail where you've seen more strength, maybe even surprising strength to you?
We're seeing that absolutely in anything beauty related, kind of consumer packaged goods, jewelry. What you are mentioning is, areas where there had been, kind of real strength kind of coming right out of, let's call it March of 21. Those have continued to stay strong. But in some ways, right, beauty is also a treat to oneself or to others. That we have not seen the same level of inflation, nor have we seen the same kind of retreat by consumers. And on the apparel side, as you mentioned, we are seeing inconsistencies as it relates to inflation and also how the consumer is acting. If we take a step back, surprisingly, at the highest end of the consumers, where we're starting to see some of the greatest change in behavior right now, and we'll see how that moves, into the holiday season.
What type of behavioral changes are you seeing there?
So at the kind of $100,000 and higher, that consumer, we are seeing really kind of real changes across the board, whether it's related to food, healthcare, apparel, as you mentioned, home goods and other big ticket items. So it's been much more kind of across the board, and surprisingly, I think overall to many of us who study it.
Thanks so much. Coresight Research founder and CEO Deborah Weinswig joining us this morning. We appreciate the time and the analysis.
Thank you so much.